Inventory in most categories seems to be going on the way up. But what about the buyer's demand? Is that also on the way up, or is it on the way down? Could we be expecting another market correction right around the corner, or could we more or less be expecting stabilization to happen right here to the Treasure Valley real estate markets? So what about median home sold price? Is that on the way up? On the way down? Is it staying stable? Where do we actually stand? Some might like you to believe that our market is about ready to crash, but is it? Let's go ahead, let's dive in, let's take a look at the data, see what's happening right here in the greater Boise, Idaho area, and welcome to another episode of Mikey's Monthly Market Updates for March of 2024. Well, welcome back after that quick break, everybody. Mike Petras here with MPRE Residential, powered by NextHome Treasure Valley. And again, welcome to another episode of Mikey's Monthly Market Updates for March of 2024. So if you are new to this channel, this is going to go ahead and break down what is happening right here in the real estate markets, right here in the Treasure Valley, better known as the greater Boise, Idaho area. But before we start diving into the data, see what's really going on, please hit that subscribe button below, hit the notification bell so that you're constantly in tune with everything that I do come out with in the future. Also, if you do like this information, please give me a thumbs up. That also helps out the algorithm. And of course, if you are looking to make a move right here to the greater Boise, Idaho area, better known as the Treasure Valley, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Also, if you have any further questions, please feel free to reach out to me, give me a call, shoot me a text, send me an email. More than happy to answer any questions that you do have before you do make that move. So let's go ahead, let's dive into the information. Let's see what last month was going ahead and showing us and what we can more or less anticipate kind of coming forward here. And also at the end, I'm going to start touch into the best strategies if you're looking to buy, sell, invest, or even if you're renting here in the Treasure Valley, on when to kind of go ahead and buy or do what it is that you wish to do with your real estate. And also stick around for the big elephants. We will be kind of talking about what happened with the NER settlement briefly, if you are curious about that, and how it could really maybe affect what is happening in real estate right here in the Treasure Valley. So let's go ahead, let's dive in, start off with Ada County like we normally do and see what we got. All right, Ada County, boom, median home sold price, especially over the last couple of months, doink, really went up. Now, do I think that this is maybe just kind of a one-off fluke, that maybe there was a lot more higher priced homes that sold and lower priced? Because remember, median home sold price, you go from the lowest, you go to the highest, and you pick what's right in the middle. You also have your average if you want to take a look at that, which is in the orange, which was actually sitting at $659,977. But the median home sold price, boom, on the way up, sitting at $556,990 for the last couple of months. Really made that jump. We'll get into the reason as to why and take a look at maybe what might be happening with that with the months coming forward. But either way, if we're taking a look at the stats all the way back to when it was 540,000, really when all this started to change, which was, of course, during COVID, but after COVID in 2022, sitting at the 540,000 to the 556,990 that we have today. We're actually up 3.05% since then. But if we're looking at the market correction to when everything hit its highest point, sitting at 602,250 down to what we got today, we're still down 7.51%. But we are bridging that gap, as you can see via this data. A lot of the losses, about 20% overall between Ada and Canyon, have started being chipped away and is starting to come up. So if you are buying, keep this in mind. But if we're looking from 2023, when we hit the lowest point of the market correction, when it really ceased and desist, that was it. We are up 12.47% from that at the 487,495. That is a relatively huge jump. How about taking a look at the 6-month breakdown? Well, this really kind of brings into play to quarter four, because we know that quarter four, and as I mentioned in a lot of different Mikey's monthly market updates, that during quarter four, things tend to slow down and prices tend to dip down a bit. It's actually a really good time to buy. It's always that way, really, in real estate, to where we get that holiday lull when it comes to the median home sold price. But has it disappeared? Well, basically, according to this, yes, it has, because we were at $539,990 in October 2023, then down to $530, $516, $514, coming back up now at $520, $500. And now that we're hitting into quarter two, which is the start of really hot season of real estate, We're going to have to continue to watch this data, but I anticipate that home prices will continue to be on the rise. But let's go ahead and let's take a look at inventory and see if that's really going to be the case. So as we know, real estate is always off supply and demand. That is how it's priced. And if we take a look at this graph, we can kind of see what is going on. And taking a look at this graph, you can really kind of see it. So if we go all the way back to, say, April of 2020, when COVID really kind of hit, we see that the demand just shot up. And you can see by the blue line, inventory went really, really down. I mean, we got down to 6 days worth of inventory, hence why our prices just shot through the roof. In fact, this area, the Boise area, the greater Treasure Valley, went up 52.7% in 2 years, which is the largest equity growth in the entire United States. But we also had that swing. For every reaction, there's an opposite and equal reaction. That's just the way of physics. And we could see that back in 2022, during the market correction, so late May, early June, we saw that inventory really shot up, and look at the buyer's demand, really went down. So we had a little lull there in around, or a little rise in the inventory in July of 2021. And then we had like another dip in the rise in the inventory of January 2023, then another little rise in July of 2023, then we lull back down. So you kind of see how it's balancing itself out. But let's go ahead and let's take a look at the inventory. There's 1,207 active homes for sale. We can see that it's starting to tick up. But what about the buyer's demand? The buyer's demand is on the way up too. 631 homes sold, but look at the orange line. The orange line is pendings. And most of those are going to go ahead and close. That is what is currently under contract with people trying to buy the inventory out here. If we take a look back at 2019, you can see that it was intermingling itself. That is showing a level of stability. And right now we can see that happening too between inventory and our pending lines. So I really anticipate that this year we're going to see stabilization. But what's going to happen when the Fed decides to go ahead and drop the federal funds rate? Either way, we're seeing that intermingling. It's not like the inventory is running away like we saw late May, early June to be able to create a market correction. So I wouldn't anticipate prices to dramatically drop down. Let's break down our inventory by existing homes and new construction. So as we can see here, existing homes definitely took a dip in the opposite direction than what we're seeing with inventory coming down over the last couple of months, sitting at 601 homes available. But again, look at the pending lines, look at the solds, it's following suit. So again, are we going to be able to anticipate maybe more of a stabilization trend like we saw back in 2019 in existing homes? I would assume so moving forward, but we'll just have to continue monitoring the data. But for inventory that's out there, buyers are coming back in regardless of where mortgage interest rates are at. And lastly, how about new construction? Well, new construction, of course, they are also able with the builders to be able to control their own inventory because they're the ones building them. A lot of the builders over the last about a year and a half, really retreated back to the pre-solds because they started maybe seeing some writing on the wall that the markets weren't doing so healthy. So they're just trying to more or less protect themselves. But are there still concessions that a lot of these builders are offering out there? Yes. And it is very, very attractive considering that overall, and we'll get to these slides here, that new construction is basically kind of taken the biggest hit overall in the median home sold price when it came to the market correction as existing homes did. So either way, though, we can see that pending line coming up. We can see the inventory kind of starting to tick, on its way down. But the builders need to stay in business, so they're probably going to start building a little bit more. And now that the weather's getting better, anticipate that one as well. But we can see the demand is coming back. A lot of pendings out there for what they're either building, which is still in the process of building, or there are some still spec homes out there that some builders are doing to be able to say, hey, it's moving ready to go. But we'll just have to continue to monitor what's going on with that. But let's go ahead and take a look at the median home sold prices in existing and new construction and see who made actually really kind of the biggest gains this time around. But overall, before I want to move on, with total single family homes right now, we're sitting at 1.91 months worth of inventory here in the Treasure Valley. And existing homes are sitting at 1.6 months worth of inventory, and new construction is sitting at 2.35 months worth of inventory. So let's take a look at those graphs. And really, who was the biggest gainer? Who really led to that 556,990 that we have out there? Was it new construction or was it existing homes? And taking a look at this graph, existing homes is a pretty good category for it, or a pretty good candidate, shall I say, for what really kind of made that change. Because we're sitting here, we're looking at 549,900, which was a huge jump from the 490 that was created last month. That's actually up 10.89% Wow, what a jump. But again, do I think that's a one-off fluke? Yeah, I kind of do, because I probably am guessing that more million-dollar homes sold than lower priced homes out there. And of course, median home sold price, again, is right in the middle of those numbers. So if you have more in the upper end, then you can kind of anticipate that to jump up. But looking at the average is kind of making a case, though, too, that it went its way up. But since 2022, when it was sitting at 515,100 to the 549,900 that we've got today, we are actually up 6.34%. But from the market correction, when it was sitting at 586,750, we're still down 6.28% since then. But again, narrowing that gap. Do I anticipate it to go the other direction next month? Down? Yeah, I do. We'll just go ahead and continue to monitor that. But look at the gains since 2023. So those that are saying that things are going to be coming crashing down, and I've heard these stories for quite some time from other channels that are out there, things are about to implode. Well, they haven't imploded yet. It's still been a while. But since the 475 that we actually hit the bottom of that market correction up to the 549,900 that we got today, we're up 13.62% since then. And wow, I mean, just what a gain. So let's go ahead and take a look at new construction. New construction had a gain at 565, which was up from the 550 of last month, which brings us up 2.65% overall. But it wasn't as big of a jump as we saw that happen, obviously, with existing homes. So existing homes really kind of drove up the median home sold price for this month in March of 2024 in the total single family homes. So let's go ahead and take a look at the health. Is it starting to continue its way up? Well, looking from 2023, when we're at the 494,900, it's up 12.40% since then. But the market correction, it's sitting at the 690, and we know that new construction in Ada County really kind of held on for a while there, for a couple of more months before it started to dip down. At the 565, we are still down 18.11% since then. So again, new construction in Ada County took the biggest overall hit when it came to the market correction coming down. But again, it's just been on the way up, and that's the point I want to make. But since last month, again, up 2.65%. New construction, everything is starting to look on its way up. So Ada County overall, median home sold price, ticking there. So buyers, stick around for the best strategies. We'll go ahead and talk about that towards the end of this video. But overall, existing homes made the biggest gains in median home sold price. How about days on market? How about the health of what's going on in Ada County? Do we have the buyers out there? Well, we do. Okay, but here's the deal. We also don't have a lot of inventory out there, and buyers are coming back up. There's not really exactly, even though I've heard of multiple offer situations returning here to the Treasure Valley, it's not like it was back before during the pandemic when everybody was coming out here and everybody wanted to buy, and we got down to 6 days worth of inventory, and there was multiple offers of like 30 or 40 per home or even 20 per home. It's not back to that fever pitch yet. And the days on market kind of show this, is that it's about 48 days now on average, a little bit up actually from the 46 days that we had last month in February. So it's just kind of showing overall that there's a semi-stability, even though that I've heard of multiple offers, especially returning to homes at 500,000 and under, and sometimes in 500,000 or about 700,000 and over to get to the $1 million homes where I've heard that happening. But overall, we're kind of looking stable when it comes to our days on market. But as we get into quarter two, I would anticipate this to go down as more buyers return. And because of where inventory is at, I would almost anticipate that multiple offers, regardless of where mortgage interest rates are, to return to Ada County. So we'll just have to continue to monitor and watch the data. But overall, we're not looking bad. It's not like we're shooting up to days on market to where it's just insane and sellers can't move their products, or their homes, shall I say, products. But either way, our markets are kind of looking okay for now on days on market. Another indication, of course, is cancels and expireds. As mortgage interest rates jump up, we could also anticipate usually the cancels to go up too as well, which we saw later on in 2023 when mortgage interest rates started getting into the really high 7s, 8s. It's like, wow, there's a lot of cancellation. Sellers were like, oh boy, why am I going to go ahead and make a lateral move at this point? So you saw some cancellations that came along there. Also, the mortgage or the interest rates might have been able to push certain buyers out of their particular contracts, which is there too. So it's like, ooh, ouch, on that aspect. But expireds overall, let's go ahead and take a look at that. That's usually sellers that are really kind of holding on to their price, saying, I've got to get this price for my house, regardless of the contract time length, and it just goes all the way through, no budging, no price decreases, etc. But we can see by the expires, they've really been minimal, which is saying that right there is an indication that sellers are appropriately pricing their homes in order to be able to move. So really is a time of necessity for sellers, and it's still there. And hence why we don't have our inventory levels really shooting out of whack because of where mortgage interest rates are. Why would you trade up your high 2, maybe 3, or low 4 interest rate to move into a 6 or a 7 at this point? Why would you? It's really an honest question. But either way, by looking at this, we're not seeing the cancels spike way out of aspect. They did tick up a little bit this month, but overall, it is still showing a healthy market out here in Ada County. All right, Canyon County, it's your turn. Let's go ahead and see. Did it follow the same deal as Ada County? Did it really shoot up? Well, Canyon County, no, not so much. It actually kind of more or less did tick up, as you can see by the graph here, but it is really kind of stabilized, and Canyon County overall has basically started to return to what is normal for this area, the Treasure Valley, which is about a 4% gain every year from what I can see here according to the data. So we're sitting at 413, 395 for this month. If we're taking a look at the 425, 4900, if that happened in 2022, we are still down 2.70% since then. Market correction, when we're sitting at the 476, 500, still down 13.24% since then. But again, let's take a look. When the market correction really ended there at 395, 445, again, there was people out there that said, oh, there's people, other YouTube channels that said prices are still going to go down. Well, they haven't. Since 2023, they've been on the way up. And in fact, actually, since 2023, they have actually been up 4.34%. So again, it's right there in that hub, in that wheelhouse of what is kind of normal. And looking at most of the stats in Canyon County, it really kind of says, hey, stabilization is here. And I believe that Canyon County has got it. So let's go ahead, let's take a look at the 6-month breakdown, see what happened there. And as we can see, it got a little wishy-washy. We were sitting at $399, $999, went down to basically $1,000 and shot up to $410, which is kind of odd considering the holiday seasons and stuff, when usually you have a lull in the median home sold price, which did happen, shot back down to $399, $990. But now we're starting to kind of tick up. We can see the 409, 818, now to the 413, 395. Let's take a look at the inventory and see if we can continue or expect this to continue to kind of rise its way. But overall, since last month, it's just up 0.86%, but there's more of a case of stability here in Canyon County than obviously there is in Ada County. So we'll just have to continue to watch the stats and see what happens. But how about that case for stability? So let's go ahead and let's take a look at the overall actives versus solds that we had in Canyon County. And I really want you to focus again back now on 2019. Let's take a look at that. Again, just like Ada County, you had the ups and downs from the pandemic and then the market correction, as you can see there, anywhere from 2020 all the way to January of 2023. But 2019, look at that, how the pending line and the available inventory lines were just intermingling. And let's look at January of 2023 all the way to March of 2024. Look at that. It's still intermingling itself. We did have, a little bit there where we're starting to separate itself, but the inventory is really showing a case for the stability that we've seen in the median home sold price overall in Canyon County. So the proof is in the pudding, according to the data that we're seeing. So how about existing home inventory? Let's go ahead and let's take a look at that. Well, if we're kind of taking a look, we can see that the inventory had kind of shot up compared to what the buyer's demand was doing. It did kind of stay on pace, but you can see that gap kind of narrowing a little bit higher if we're looking more towards like July of 2023, all the way to basically January 2024. But really what kind of happened overall to the gains since January of 2023 to what we've got today? Did existing homes really kind of outpace what was happening in new construction? Well, we'll go ahead and we'll take a look at that when we start breaking down what happened between median home sold price, between existing homes and new construction. But what I want to point out here is look at that pending line again in March of 2023, according to the stats. Boy, is that buyer's demand really starting to hit the opposite direction. In fact, even look at the gray line with the actual sold, up to 176 homes sold. But again, the pending line is just showing you more or less the health of the buyers out there. Now, as inventory ticked its way back up too, Cool, it has. But look, that gap is starting to narrow itself. And I almost anticipate that we will see, again, the intermingling that we saw in 2019 when we start getting into quarter two, quarter three, and maybe even into quarter four. So we'll just have to continue to see what's going on. But I anticipate a runaway of just extreme inventory that led to the market correction that we saw back late May, early June. I really don't see that coming out this direction. Well, let's take a look at new construction. New construction, the opposite. It's already kind of there. The pendings have superseded the inventory. But again, if you paid attention to Ada County, the builders can control their own inventory. So a lot of these builders retreated back to pre-solds. So what that means is that you went ahead, you picked your lot, you picked your style, you picked all the stuff that you wanted to throw in if that particular builder had a studio, and they built it from scratch for you. So it wasn't like there was a lot of spec homes just sitting out there waiting for somebody to come along. So either way, there wasn't a lot of those around. But we can see there that there's already the intermingling going on. The sellers have, or the builder has basically kind of controlled their own inventory. But again, we can see that there's still a demand there for new construction. The pendings are either still waiting on their homes to be done, or they found a spec home to be able to go ahead and move into. But again, the demand for new construction is really good in Canyon County. And why would that be? Is because really it's cheaper overall, really kind of in the median home sold price as compared to Ada County, as you can see. And new construction really took the biggest hit overall in the median home sold price during the market correction. So new construction, and the fact that they're still offering up concessions, or at least most of the builders are out there, it's almost a better deal to be able to go into new construction than an existing home. So keep that in mind as you're looking and you're out there thinking about buying. That new construction might be the way that you want to go. But who gained the most for this month? Well, we can see we're sitting at $393,450 here in existing homes, which is up from the $378 that we had the previous month, which puts us up 3.92% overall since then. But let's look at overall too, who's made the biggest gain overall since January of 2023 when the market correction really ended. So we can see here at existing homes, the lowest point was sitting at $339 across the board, up to the $393,450 we got today. So existing homes have actually jumped up 13.83% since then. Well, it's been chipping away at the market correction, which we're sitting at the $425. We're still down, which since that is down 7.42% since then, that mark. But we have now crossed the level again in 2022 at the $390, just up $3,450. Since then, just up 0.87% in existing homes. Let's take a look at new construction. New construction, again, the same trend has been on the way up. We're sitting at $434,990 for the stats in March of 2024, which is up from the $422,990 that we had in February of 2024, which puts us up 2.75% in that category. And if we're looking overall since the 2023, which are up the $405,859 to the $434,990 that we've got, we're up 0.69%. So answering that question in Canyon County, which one kind of made the bigger gains overall from their lowest points, you're going to see that in existing homes as it comes down to new construction. But when we're sitting at $549 during the market correction, all the way down to what we got, new construction still took the biggest hit overall, just like it did in Ada County due to the market correction, down 20.76%. That's why a lot of the builders are probably still trying to get that attraction out there. They're offering concessions, trying to recoup. They're trying to keep their inventory levels down, as we can kind of see from the stats. But overall, Canyon County has definitely made that case, if you're averaging it all, to a case of stabilization. And again, back to the normalcy that we saw, or the normalcy that's typical for our markets, which is at a 4% gain, which was there. But let's just kind of recap back to January of 22 levels. When it's sitting at 465, have we gotten there? No, we haven't. We're still down at 6.45% overall. How about the health of the market? Well, let's take a look. Again, just like Ada County, staying level. In fact, actually, it's still sitting at 48 days for the days on market for an actual transaction to go from start to close. So again, if I heard about multiple offer situations, just like I have in Ada County, yes, it's usually at $500,000 homes and under is where a lot of the fight is because of where mortgage interest rates are at. And I've also heard it in about $700,000 and up when it comes to $1 million homes, etc. But it's just that kind of sweet spot right there, anywhere from about $500,000 to $700,000 that really kind of seems to have an even ball game between the both. Now, there's probably other realtors that say, no, I disagree with that. And maybe that's the case. But either way, we're still kind of having, a nice market. It's not like we were back in during COVID when we were seeing 13 or 12 days when there was just crazy multiple offers going on because there was no inventory and a huge buyer's demand during the pandemic. Will we get back to that direction? Well, if mortgage interest rates start coming down, we could see an influx in buyers come along. And right now, is the inventory going to be able to sustain that? Not according to the numbers that we see. So we'll just have to continue to monitor that and see what happens when the Fed actually decides to cut the federal funds rate for the first time, which should probably be in June. Well, let's take a look at another health key in Canyon County. And that would be cancels and expires. Are the cancels really getting out of control? And cancels will when usually mortgage interest rates start getting high. I know that we, back towards the later end of the year of 2023, they were getting into the high sevens, even the eights, which is really crazy. And we saw the cancels just kind of go through the roof. It was like, wow, that's crazy. And of course, during the market correction, because the buyers really tapered off and these sellers were like, nobody's coming around to buy my house. Well, yeah, the inventory really spiked out of control. Hence, we had a lot of cancels. And we also, our expired started going up too, because people's homes weren't selling. There just wasn't a demand, hence why the prices came the other direction. But we can see that cancel spiked up a little bit. Well, as did mortgage interest rates. So this is kind of expected. But let's take a look at the expireds. The expireds have came down just like it has in Ada County. So it's really indicating that sellers out there are appropriately pricing their homes in order to sell in this market. Because we know that if you're asking for a little bit too much out here now, the buyers, they're just going to disappear and find something else. So either way, Canyon County overall is looking good. It's looking kind of stable. It has that stabilization pattern. It's gone up about 4%, which is the average of what we can expect for our area here in the Treasure Valley during a really normal, healthy market. But we know that we have those extreme swings, both between what happened during the pandemic and what happened in the market correction. But overall, Ada County has saw more of a shot up in the median home sold price overall, which I think is a one-off fluke, than what happened in Canyon County. But we'll go ahead and we'll continue to monitor this data, and I'll keep coming out with these every month so that you know what's going on. All right, now it's time for the big elephant section of this video. What is going to possibly be out there, or what is possibly out there that could result in another market correction or even a crash here in real estate? So let's go ahead and let's talk about some of those. But first, what I want to talk about is the NAR settlements. Most people are like, what is going on with that? Are buyers really going to be on the edge now if there is a clear separation between a seller offering a co-op to a buyer's agent, which has been around for quite some time here in real estate? Now, there is a lot of misinformation out there. There's a lot of left-wing news media, and even our president of the United States, that came out recently and said, oh, hey, it's always been a set 6% for the transaction of your home. And that was never a part of what the NAR had actually said. It is always negotiable. I learned that in my real estate class, and I'm sure every other realtor that is watching this video or seeing this video or hearing it from their clients, they know that it was never a set fixed deal. It was always negotiable to be able to go ahead and sell your house, and whether or not you wanted to offer a co-op commission to the buyer. Now, the lowest you could go was $1, okay, legally, to be able to offer to a co-op. Now it's down to 0, according to that. But is this going to start making a clear-cut distinction between sellers offering a buyer's commission? Well, yeah, with what left-wing liberal media has been saying, and even the president of the United States, they're basically trying to say, well, this has been the way that it is. Sellers kind of more or less fight back. Well, it's always been that aspect, again, of whether or not you wanted to go ahead and do that. But there is going to come a clear-cut distinction, and actually we are starting to see that out there. I belong to some groups, just specifically realtor groups, and I've seen posts coming up now to where sellers are actually doing this before the NAR settlement even gets out of its preliminary stage, that they're not offering a co-op commission over to a buyer's agent. Now, what does that mean? For you buyers, that means that could come out of pocket for you. So the reality is not only is the home prices on the higher side, which I hear all the time, plus mortgage interest rates are on the higher side, but now you could also be facing the fact that you have to pick up your commissions for professional representation for a real estate agent. Now, can you represent yourself? Sure you could. Could you go to title? Sure you could. Could you go to a lawyer? Sure, you could. But as a lawyer, is title going to show you homes? Are you going to have access to other homes? That is one thing to keep in mind. That might change, coming up. We'll just have to see what's going on. But either way, do you know the contracts well enough to be able to compete against the seller, to be able to know that you're not getting basically duped? Do you have the negotiation skills? Do you have the negotiation skills when it comes to requests for repairs? Do you have the knowledge of what to do when appraisals come along? Do you have the time to be able to discern any problem that might come up during your transaction process? Hence, this is why we're real estate agents. This is what we do for a living. And I will come out with videos breaking down what it is that we do here at MPRE, powered by NextHome Treasure Valley, to be able to really successfully win in your situation, to be able to get you the best possible deal on that house. So I look forward to those videos. I look forward to making them for you so that you know how it is that we compete. But either way, back to it. Now it's kind of created, again, that clear-cut distinction to where you could be responsible for picking up your agent's commission. So I know that's not something that you want to hear. Veterans, another thing too, I came out with a video last week. I will put it at the end of my videos. I want you to click on that so you know what could possibly happen with the Department of Veteran Affairs and how it could hurt your use of a VA loan. It's something that you're really going to want to know. But does that mean that all sellers, though, are going to not offer a co-op over to a buyer's agent? Well, I'm going to say no, not all of them. Is going to be some that are going to test the waters. I feel that coming from sellers, trying to see if they can get away with not having to pick up that fee or even contribute anything over to the buyer's side. But smart sellers are going to know to be able to go ahead and contribute something, okay, over so they can continue to attract buyer's agents to come in. Now, that's the other thing, is that the MLS is no longer going to be allowed to where we can see what is going to be offered from the seller on the co-op commission side. So what we'll have to do, basically, realtors, is we'll probably end up calling saying, hey, do you offer anything in that aspect? But it could also be put on individual agents' websites. So it's a little bit more work for us realtors to do. And also now we're going to have to go ahead and explain to buyers saying, this is the commission going into this deal of what we charge for our particular services. And again, just like we do with sellers, now I'm talking with the buyers and saying, hey, here's the level of service that we offer for these deals, or this is what we're willing to negotiate for. And if it's, for example, say we lock in at 3%, let's just go ahead and use that in a buyer's representation agreement. I say, hey, this is what my services are willing to offer. Well, if it's at say the seller still wants to offer 2%, well, then you'll be responsible buyer for that 1%. That is the difference between what we have on contract and what the seller is willing to offer. Make sense? But if the seller's offering, say, 4% and we're locked in at 3%, well, then I cannot charge you, or I cannot get that extra percent from the seller. So now that you got a gist of some of the basics that happen with the NAR settlement overall, a lot of people are saying that this is going to bring down home prices. Well, really, is it? Well, we know that if they're not going to pick up the co-op commission, then overall, the CMA that we give to the sellers should come down a bit. But is that going to be something extreme, like coming down it's $30,000, $40,000, $50,000? Well, of course, it depends on the price that you're trying to sell your house for. But at the same time, is it going to crash the overall values here in real estate? No, I don't see that happening, because again, the one thing that they're missing is supply and demand. If there's no supply and a huge demand, prices are going to go up. We're already seeing that here, even though some are starting to test the waters, even though the NAR settlement is still in its preliminary stage. If this comes to fruition and it gets past the appeal process that NAR is about to do, well, then it will come to fruition come July 1st, and we'll see how this really shakes out between buyers and sellers. But is it going to bring down home prices, something on an incredible aspect? No, I don't anticipate that to happen. If there's a lot of sellers, though, out there that are trying to do that, to where they don't want to pick up the agent co-op fee, that could maybe possibly be a probability. And why would that be? Is because they're not able to sell their homes. So if there's nothing offered that direction and the buyer doesn't have the means to pick up their agent's fee for professional representation, then yeah, sellers, you can anticipate your home to sit longer. It really can happen. If it starts sitting longer, I can see you actually starting to whittle down your price in order to attract buyer over to your house along with their buyer's agent. But the key is here, if inventory levels aren't going astronomically high, and the buyer's demand is starting to taper off, then home prices really won't come down. Is it going to be another market correction? I just don't see that one coming to fruition, especially with what we're seeing by the numbers where inventory and buyer's demand is still there. Now, buyer's demand could be shooting up because people know that the preliminary of where the NER settlement could be coming into fruition come July 1st. So they're probably trying to get in there, and get the co-op fees while it's still in the MLS. And that's kind of the deal. They know that, hey, I don't have to pick it up yet. That could be. So we'll just have to see how this shakes out. But do I see inventory jumping up to astronomical levels like we saw during the market correction because of the NER settlement? No, I don't, because not every seller out there is not going to offer a co-op. And it's not like me as a buyer's agent can't negotiate that for you to save you money. So we're just going to have to see how this filters out overall. And we still don't have all the full details yet of the NER settlement. Hence why it's kind of hard for me to talk about. I know other realtors have talked about it, but you can see in their videos too, if you're paying attention to YouTube, they don't have all the answers either. So keep that in mind as this kind of unfolds and how this is going to come to fruition. We haven't even made it past appeal, so we'll see what's going on. If you have any further questions, though, about the NER settlement, feel free to give me a call. I can be reached at 208-715-7827. Shoot me a text, send me an email. More than happy to answer any other questions. So now let's start talking about some of the best strategies that are out there for you buyers, sellers, investors, or renters. If you're looking to get into the real estate markets right here in the Treasure Valley, what are some of the best strategies if you are looking to do those things? So buyers, let's go ahead. Let's start off with you. So buyers, as we can see, according to the stats, the median home sold price is on the way up. Now, has it stabilized more in Canyon County than it has in Ada? Absolutely. But are the gains still coming back? Is it still chipping away? Is supply really outpacing demand? In that case, it isn't, according to the data. So can we anticipate home prices to continue to be on the rise? We can, according to the data. But what you could anticipate is that you now starting to have to pick up a buyer's agent's fees for professional representation from a realtor to go ahead and get into your home. Or shall I say the home that you are willing to buy or that you want to get. Now, are mortgage interest rates also on the higher end? Yes, they are. But will those possibly be coming down? I would absolutely anticipate so. Because why? The treasury markets are still in a state of kind of disarray because the Fed still has not lowered the federal funds rate, which if you watch my videos, we know that when the federal funds rate is on, if there's any kind of discern between that or it's on the way up, bonds sell for less. When they do, the yields go up, and mortgage interest rates directly follow really what happens with the 10-year treasury note in terms of the yields and what happens in the MBS markets. So really, until the Fed cuts the first time in the federal funds rate, you can anticipate the mortgage interest rates to still be on the higher side. So what does that mean when the mortgage interest rates come down compared to what the inventory that we're seeing in the graphs? Well, we know that there's not a whole ton of inventory out there. So if mortgage interest rates all of a sudden come down to an acceptable level or come down to something a little bit lower than where we're at today, you can anticipate the buyers to start coming out of the woodworks and buy up what little inventory we have left. So what could that mean? That could mean multiple offer situations, and that could just mean more buyers out there to buy up what little inventory. Again, supply and demand. And if it sucks up and we have multiple offer situations, which are already starting to return here, really start returning to the Treasure Valley area, we can anticipate home prices to go even higher. So with home prices already on the rise that we can see according to the data for the Treasure Valley here, and we know that buyers' demand is still coming out, I think that buyers here are seeing that window. They're seeing that window that they know and they think, and according to dot projections from the Fed, a lot of the Fed members of the FOMC are anticipating to drop the federal funds rate, make the first cut in June, and have 3 more this year before we end out the year. Now, where is that going to bring rates to? Well, honestly, I think it's going to be in the 6s here for this year. Maybe the first federal funds rate cut, we could see 6.5s. And with some lenders, you can see them maybe get down to maybe about 6.25, 6.5, etc. But are you going to anticipate rates to drop back down to 3s, 4s, or even high 2s that we saw a year and a half ago? buyers, I would not anticipate that, especially with the Fed doing quantitative tightening. And what that is them selling off their treasury reserves, selling off their MBS, etc. As long as they're doing that and they're not doing the quantitative easing that they did over the last 10 years to keep the rates that low, do not wait for that to happen because it's just not going to come to fruition anytime soon. But if you are willing to wait or you are thinking of waiting, even if you get into 2026, I would anticipate rates probably to be low fives, mid fives best. So as they start coming down, though, you're going to see the buyers come out of the woodworks, soak up the inventory, drive up the prices, which is not going to be a good way. It's not going to be a good thing for you come around June when they actually do it. And then the second whammy that you got coming up is going to be the NAR settlement if it does come into fruition, because right now it is in the preliminary stage. I think it's going to, and come July 1st, you could also be on the hook now to pick up the fee for your buyer's commission. So I think what we're seeing here is a lot of buyers seeing the writing on the wall and getting in and soaking up our inventory, which is currently driving up the prices. So if you have the means, all that, I would recommend, highly recommend, that you start laying the foundation with a preferred lender right now to be able to know what is going on and start setting that foundation for you to get into the home of your dreams right now. While sellers are still offering still offering a co-op commission over to a buyer's agent, and prices are still relatively low for now before the interest rates come back down, which could start making those fights. So again, laid out the tools here for you. If you'd like to know a little bit more about the best strategies or how we can win here at MPRE Residential for you, powered by NextHome Treasure Valley, please feel free to reach out to me. Give me a call, shoot me a text, send me an email. More than happy to start setting you up for that win and sending you in the right direction to home ownership right here in the greater Boise, Idaho area. I look forward to hearing from you. All right, sellers, it's your turn. And sellers, I actually really kind of want to focus on the NAR settlement itself. Is it a good idea to go ahead and cut off completely any contribution over to a buyer's agent? Well, I'm sure there's a lot of you out there that are saying, well, I don't have to, make any kind of contribution over to a buyer's agent. I want to keep more money for myself. That is not a bad thought. If this comes into fruition and it becomes into practice as of July 1st, that is going to come into play. And you could already do it right now if you wish. You really could. I believe you still have to offer $1, if you wish to completely, cut off, a buyer's agent in its entirety, but it's going to be set to zero if that comes into play. But is that a smart idea to do? Think about that. Now, if you are doing that, you are going to basically put buyers in a predicament to be able to go ahead and afford your home. So not only are home prices on the higher side right now, but mortgage interest rates are also on the higher side. So if a buyer has to come in and pick up an extra, let's just say, the house is $500,000 and you're not offering 3% or even a 2%. So you're offering either $15,000 or $10,000. If you're not offering that, then that could actually push out some buyers from being able to purchase your home, because that's now an extra $10,000 or $15,000 that they have to come up with out of pocket. So is that the best strategy to go ahead and sell your house? I wouldn't say in an aspect that it is. And can you anticipate buyers putting it in their offer to go ahead and pick up their professional representation? You can almost guarantee that. Can you guarantee the phone calls coming to your listing agent? Sure. Is a listing agent going to go ahead and put it on their website if you are offering something? Yes. Is it going to be in the MLS anymore for us? No. So that's where it's not going to be visible. So you're going to see negotiations even returning on that aspect if you are trying to sell your house, that you can anticipate the buyers trying to come after you to be able to give up some of your equity in order to pay for the professional representation that's coming along for the real estate agent. Now, are buyers always going to use professional agents now? Or maybe they might use flat fee agents and stuff like that. Are you going to get the level of service coming from the other end for flat fees? Or if they're not making, a viable living on that aspect, well, you might not. So again, I always beg and ask the question, if you give a pay cut to somebody, or if you took a pay cut at your own work, at your own job, would you anticipate giving the same level of effort into the job that you're doing currently? My guess is that to no. So can this start affecting both aspects? And if you're starting to to even go after your listing agent that's trying to market your house. If you're not offering a reasonable compensation, could you imagine the level of service tipping down on that aspect too? Yes, you could. So sellers, this is coming to a crux for you in terms of what it is that you want to do. And also, if you really love our vets like I do, our vets, because of the Department of Veteran Affairs and where they actually have their stance in terms of not being able to pick up buyer's commissions or pay for any fees of their veterans, our veterans could be hurt overall too as well. So if you love our vets, it's something to kind of keep in mind too, to be able to help them and protect them until the Department of Veteran Affairs decides to make a pivot. But sellers, this is a time that, especially when I'm coming in for a listing presentation for you, if you want to use me to sell your house, I'm going to go ahead and talk about this with you and talk about the best strategies in order to get your house off the market, to get it sold, to get it done for the most money possible and in the quickest time possible. So start thinking about your priorities. If you especially need to make a lateral move, you like say your work moved, etc., in order to get your house sold in those or in that order for the most money and in the quickest time possible. So sellers, keep this in mind. I wouldn't say just go out there right now and start cutting off, the buyers at the knees. It could affect you in the long run in order to effectively sell your home, and it could sit a lot longer than you wish it to. So if you are looking to discuss this a little bit further, you are thinking about selling and you wanted to know a little bit more about the NAR settlement and how it can affect that, feel free to give me a call. Or if you are looking to sell your house, please feel free also to reach out to me. Love to set up that appointment with you, which usually takes about 30 minutes, to be able to go ahead and discuss this and let you know what is happening overall when it comes to the NAR settlement, how it can affect the sale of your house, and getting, again, your house sold in the quickest time possible and for the most money possible. I look forward to hearing from you. So investors, now it's your turn. Let's go ahead and let's dive into that. Investors, of course, as we can see overall, since especially 2023, and in a general aspect, looking at the counties, Canyon County has been up over 4% and over 12% in Ada County. So the home values are actually on the way up. But so are the rents. If you are looking to get like a secondary property and you want to rent it out, those are also on the way up as well. But are mortgage interest rates still high? Yes, they are. So if you are looking to get a loan to do your secondary property, know that the interest rate is also going to be higher because it is a secondary property instead of your primary. And so it really comes down to how much you're throwing down. Of course, if you're throwing more money down, the better your capitalization rate is going to be. And of course, if you're coming in and paying in all cash, that is the best capitalization rate that you're going to get here in the Treasure Valley. So if you'd like for me to run that capitalization rate for you on particular properties, you wish to have me represent you to be able to win for you in the purchase of that property, please feel free to give me a call, shoot me a text, send me an email. Would love to get that rolling in the right direction for you to be able to pick up that property. So, but overall too, if you are looking for flips, there's not a lot of inventory out there to be able to get that. So the flip game is still really, really tough out here if that's your area that you want to go. But here's the other thing too, is that now with the NAR settlement coming through, I almost anticipate big conglomerates, hedge funds again, to start coming out of the woodworks. Now that they don't have to pick up, a buyer's fee on that aspect, they'll be able to come in and start picking up a lot more investment properties in hedge funds. So could that make that a lot more harder for you to be able to get a secondary property with the limited inventory that we do have out there? I do see that happening. I see that happening. So do I see BlackRock, companies like BlackRock taking advantage of what could be possibly coming up come July 1st? I do. So keep that in mind, investors. But if you are looking for those secondary properties now, I would anticipate probably looking into that now a little bit sooner than later, as you're going to be facing quite a large corporation that owns about 80% of the S&P 500 and really owns globally a lot. So if you'd like to know more information about that too, my thoughts on that, feel free to reach out to me. But investors, if you are looking to make that step, I look forward to representing you. And of course, lastly, renters. Yes, renters, like I say every time, you are paying a 100% interest rate. Why? Because you're paying your landlord and you're helping them out with their equity. The 12% gain in Ada, the 4% in Canyon, that's something that you are currently not getting. Now, I know that mortgage interest rates are high, and that's probably what is keeping you out. But so are home prices. Home prices are on the way up too. That's also not helping. So until the Fed actually makes that cut, the first cut, which is hopefully coming in June of 2024, expect mortgage interest rates to still stay on the higher end. So again, like I said with the buyers, what is going to happen once the mortgage interest rates comes down to a better level than what they're at today? Expect more buyers to come out of the woodworks. And right now, inventory is low. So it is a whammy on all aspects. But if you do have the means, you think you have the means, or you're trying to get into home ownership, you don't know until you actually start talking with professionals. So the first key, of course, is talking to a professional like me, a real estate professional, but also talking to an awesome loan officer out there, which I know many around the Treasure Valley. So I recommend that you give me a call, shoot me a text, send me an email, so that way you can start setting that foundation. And again, like I've said in the buyer section and even in the elephant section, talking about the NAR settlement that is coming around the corner, if the sellers are starting now to be reluctant on being able to pick up professional representation for, say, a buyer's agent to represent you, that could be an additional fee coming down the pipeline for you as well. So we're really kind of hitting a crux here, right? And renters, if you are trying to set that foundation, I highly recommend, and I'm trying to push you, that direction, to at least start talking and see if it's viable for you to be able to get into home ownership and get some of that equity and that asset for yourself instead of protecting your landlords. So if you do have any further questions, or you'd like to know to speak with that loan officer, feel free to give me a call, shoot me a text, send me an email. More than happy to set that up for you, or to talk with me, because it hurts nothing to be able to talk with us. What it will hurt is if this comes to fruition and all this does pop up and it really pushes you out of home ownership. So renters, I look forward to hearing from you. Well, and always, thank you very much, everybody, for taking the time out of your day to watch these incredibly lengthy videos. But I do come out with these to keep you informed of what is happening in the real estate markets, what could possibly come popping up that could affect them. But overall, to just let you know, if you are looking to buy, sell, or invest, what the best strategies are, considering the current predicaments that we're in. And of course, if you have any further questions, or you are looking to buy, sell, or invest right here in the Treasure Valley, or the better known as the greater Boise, Idaho area, feel free to give me that call, shoot me that text, send me that email, and I'd love to answer any questions or get you moving in the right direction towards home ownership, or even selling and moving somewhere else. So I look forward to hearing from you. But before you go, if you did really enjoy this content and you find it useful, then you're going to want to keep in tune with it every time it pops up. So please hit that subscribe button below, hit the notification bell so that you're constantly in tune with what's coming up. And if you are looking on making a move right in here to the Treasure Valley, I do have my relocation guide available for you, absolutely free. Just go ahead and click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. If you also feel that this is going to be useful for somebody else, please feel free to share it to someone else. Also, give me a thumbs up if you like this content. It helps out the algorithm so it can be pushed out there to YouTube. And I really thank you for your time in watching this video. So I look forward to the day that we do speak. I look forward to the day that I call you my neighbor. God bless. Until then, thank you so much. Bye-bye.